Hope you're having a great weekend so far. I'm going to go ahead and go through the setup for Corelogic 2.0 and how we're going to make some money this next quarter coming up for the end of the year. A lot of opportunity, and I'm going to get started with this, and we're going to start with the moving average setup on the chart. Now, this setup works for any time frame. It's basically how you're going to determine whether the stock is currently in a downtrend, an uptrend, or it's on the fence of maybe reversing the current trend. So let's go ahead and take a look. Now, to begin setup, the app we're going to be using for all these demonstrations is going to be Webull. If you have a different brokerage and you're in the group, it may be the same process, but it also could be slightly different. I'm not sure because I am going from Webull's perspective. Now, this is the chart without anything set up on it. This is the default view with hollow candles set up. As far as candles, you can use whatever you'd like. I like to use the standard candles, but some like to use hollow. It's totally up to you. Now, as far as how to get the moving averages up and running on your chart. So if you look at the top left, you'll see these icons on Webull. This one right here, highlighted by the yellow box, is going to be the one that you will be clicking to see your indicators. Once you click it, these come up here at the top of the screen that you see, the MOM, MACD, RSI. Those are your default indicators. If you would like to edit them, you come over here to indicators, drop down, and then you'll be able to see more options. But for now, all we're going to worry about is the MA and the RSI. But for this video, just the MA. So what we're going to do is, looking at the chart, when you actually click on Edit Indicators, you're going to want to come to the MA and click it on, and then come over here to Inputs, and then the top four. You want to make sure the first one is set to 252, which is the average amount of trading days in 1 year. Then you have 200, which is a standard moving average. Then you have the 50, which is another standard moving average. And then you're going to have the 21. So just these top four. Ignore these bottom two here. So 252, 200, 50, and 21. Once you get the numbers put in there, the length, then go over to Style and style the colors. For simplicity, let's go ahead and make the 252, we're going to make that one, let's make that one yellow. And then the 200, we'll make that one red. And then the 50, we will make that one orange. And the 21, we will make white. And you can set it up however you want. This is just an easy way for me to remember which two are which. But the reason why we're doing this is because we can determine trend changes. Now, one more thing to do before we get started with the moving average. To set up gap viewing on your chart, right-click anywhere on the chart, go to Chart Settings, make sure Extended Hours is checked, show high-low price. You want to overlap the volume, highlight indicator values, and then show corporate actions for splits, dividends, and earnings. And then up here for show candles gap, put 5 because you want the maximum amount possible. And this is just 5 at one time, not 5 total. So keep that in mind. So now you're all set up. You got your gaps, you got your MAs, and you got your candles set up. We're all good to go. So how do you use these moving averages to trade? Well, you don't actually use it to trade. You just use it to help gauge where the sentiment is, where the current trend is. Now, this is NT&X on the daily chart. And what we're going to do is we're going to zoom out, and we're going to go back in time and just look at these moving averages. So the top two, or the higher moving averages, being the 252 and the 200, those are our red and yellow. The lower moving averages are the white and orange. Basically, whenever you see the red and the yellow, or the higher time frame or higher day moving averages underneath the lower day moving averages, that's your bull trend. When you see the higher day averages on top of the lower day averages, that is your bear trend. Now let's check this out on SPY. So using SPY alone on the daily, you can see every crisis in history by using these moving averages alone. I'm going to go ahead and turn the line style to non-colored bar, just like that. So I want you to look and just see. Whenever the red and the yellow is below the orange and the white, we are in an uptrend. Whenever it flatlines, we are in a downtrend, but then shortly recover and it goes back underneath. So lower time frame on top, meaning 50, 21, uptrend. 50-21 underneath the other two, downtrend. Uptrend, and then the downtrend. The only time that these ever come down below those higher moving averages is in major crises, like COVID right here. Right here we have LIBOR to SOFR back here as well. This is the tail end of the 2008 crisis when they raised the debt ceiling right here. And this is 2008 right here. And then we have the dot-com bubble right here. This works on any time frame. If you go to the 5-minute, same thing applies. When these are above these two, you're in an uptrend. Whenever the red and the yellow cross above the orange and the white, you're in a downtrend. It can be used on any time frame. And it's literally that simple. And that's should help a lot of you determine if it's a good time to buy. Because what you want to look for is, for example, the 5-minute here, whenever you see these lines come down into a bowl underneath those bear lines here, these are the bear lines, these are the bull lines. Bear lines are on top, bear market. Bull lines on top, bull market on any time frame. It's whenever this starts to curl back up, this is your accumulation. When you get that bottom curl back up, that's what you can trade off of. And it works again on any time frame. Right here, just went into the bull zone. We were in an uptrend, right? And then boom, what happened? They all converged and then it swapped. And now the bear lines are on top. So just keep that in mind. Very, very easy way to tell if the market trend is up or down. So that's the moving averages. To reiterate, 4 of them. You want the 200 moving average, the 252, the 50, and the 21. The 50-21 are the bull lines, and the 200 and the 252 are your bear lines. If the bear lines are on top, bear market. If the bull lines are on top, bull market. Now when I say bear market and bull market, I mean respective to their current time frame. Have a good one.